Okay, good afternoon, good evening, everyone. Let me check if our speakers online can hear me and see us. Krishna and Simon, could you put on your camera?
I can hear you, Sanjay, yeah.
Thanks.
Hi,
Great.
Sanya.
Thank you for joining.
Yes, you're audible.
Great. Thank you. Yeah. Good evening, everyone, and thanks for joining that late at COP in the second week and also that late today. We want to have a roundtable discussion or dialogue today, not a panel, so I'm really looking forward to the exchange also with our speakers in the room on the role of the private sector in protecting livelihoods and ecosystems through climate risk insurance solutions. So we have invited very great experts to join and to give some inputs to start with, but then really we would open it up to if you have questions, if you have also thoughts on what was said. So I'll quickly introduce my speakers or contributors. So we have online Krishnan Narasimhan, who is the lead specialist for climate disaster risk financing and insurance for the United Nations Capital Development Fund, and who's also the program lead for the Pacific Insurance and Climate Adaptation Program. With us as well online is Simon Young, who is a senior director at Willis Towers Watson, an insurance broker, and Willis Towers Watson Climate and Resilience Hub. He has great experience also with working with the different risk pools in the Caribbean and in Africa. And then next to me in the room, Catherine Cook, who is the principal consultant for international climate policy and finance at the Oxford Policy Management, and who previously was the Commonwealth National Climate Finance Advisor in Fiji. So really a lot of great input here, and I know we have also in the audience some representation talking about disaster risk financing in Pakistan, also from a heatwave insurance index insurance project in India. Yeah, to kick it off, maybe I'll ask Krishnan to talk about some of the innovative solutions for building resilience for individuals and communities in the Pacific. And maybe before that, introduce how the United Nations Capital Development Fund is working with the private sector. Over to you.
Thanks. Thank you, Sanya, and very good afternoon, very good evening to the participants, both online and in Baku. Thank you for this opportunity. So the UN Capital Development Fund is a very specialized agency of the UN, with meaning that it is the only UN agency which has investment capital mandate, wherein we can deploy blended financing instruments like loans, guarantees, besides grants and the technical assistance to de-risk the private sector as well as the public sector. And when it comes to closing the production gap or addressing the impact of extreme climate events, especially in the small island developing states, whether it is in the Caribbean or whether it's in the Pacific or elsewhere, the challenges around lack of appropriate and affordable ex-ante or ex-post instruments remain. So in this context, when we started the program in the Pacific about 4 years ago, we started with the baseline of zero. So there were, except the sovereign risk pool, there was nothing available at the micro or the meso levels. So UNCDF, through a market systems development approach, by working with local private sector institutions, including like local insurers, fintech providers, mobile money operators, as well as other like financial service providers like cooperatives and various micro banks and national development banks, has built an ecosystem of partners in about 7 countries now, where market-based like parametric insurance solutions are available, digitally delivered at the last mile, either through a mobile app or through appropriate sort of digital interfaces. And there is also a very strong payment integration with the mobile wallets, which means that people can pay premiums using mobile wallets. They can also receive payouts using mobile wallets. The target sectors have been, agriculture, fisheries, retail, and tourism, as in smallholder farmers, fishers, market vendors, and informal sector workers. And as I'm speaking to you, starting in 2021 during COVID, there was only a coverage of about 1,300 households, and by the end of this year, we expect the numbers to go up to 50,000 households in the Pacific. And quite significantly, earlier this year and last year, there have been several payouts to almost 2,000 households, and these were all following extreme rainfall events in Fiji, Vanuatu, etc. I think I'll stop here, and if there are any other questions, I'm happy to answer. So all I can say is that there's been a very deep and very robust involvement of the private sector in delivering these solutions at the last mile. Thanks.
Thank you very much, Krishnan, for giving an overview also of the impressive work in the Pacific. I think now we do a first round of what are the existing solutions. So I'll ask Simon to also talk about innovative approaches that the insurance industry can develop or is involved in to strengthen the resilience of individuals and communities around the world, really. And what are the different stakeholders that are involved there?
Thank you, Sanjay, for the opportunity. It's great to be able to join you. So I think there was a big push probably a decade ago from the private insurance side into index-based agricultural insurance, and that is definitely continuing. The numbers are growing, but there were also, I think, challenges identified which we have had to address, and many of those challenges were around the scale at which parametric insurance, index-based weather insurance, can operate effectively, capturing local weather conditions, local agricultural conditions on the ground for farmers. And so I think we realized that aggregating these the folks who we were trying to protect the livelihoods of was the way to go, and a better way and a more effective way to scale up these solutions. So I think that there's been a general move towards trying to work with aggregators at the meso level, and there are various initiatives to that doing that now. Some of those are working through the risk pools, and I would highlight that the African Risk Capacity in particular has kind of moved quite quickly beyond its core mandate to serve governments, and is now has quite a lot of non-governmental business, including with meso level risk aggregators. It's underwriting a lot of weather index insurance for agriculture at the meso level, and the other risk pools are following as well. And so there is a set of initiatives going through the risk pools, and then there are also kind of standalone initiatives which are trying to reach those whose livelihoods are most directly impacted and address those livelihood impacts, rather than trying to, I would say, fit those kind of livelihoods into established traditional insurance processes and policies. So an indemnity policy for a house that doesn't really have any material value, or the owner, the occupier is not the owner, does not really work very well, and often the kind of barrier to entry to traditional insurance is too high for many of the people who are most vulnerable. So I think we're trying to be creative around the use of the parametric instruments in particular to meet those needs. In the Pacific, we're particularly concentrating ourselves on those who are working in and around the blue economy, and around businesses that are investing in the blue economy. And we think this is an area of potential. Well, already we've seen some kind of breakthroughs with innovative solutions for protecting livelihoods that are dependent on the services of natural assets. And so that's definitely an area where we've seen emerge over the last few years, and we think that there's a lot of potential there for meeting livelihood protection needs of coastal communities in the most vulnerable countries to climate change.
Thank you very much. Yeah, as you said, over the last years, more and more pilots are actually scaling up. And parametric insurance is coming in to help overcome barriers that were there before and maybe can reach communities that otherwise didn't have access to such financing and to build the financial resilience. So Catherine, OPM has worked on a lot of different projects and research engagements. Where have you seen, how have these parametric insurance projects have had an impact on building the resilience for communities?
Thanks, Sinya. Firstly, to say thank you, and also very nice to see both Krishnan and Simon again. As part of our study at Oxford Policy Management, I'll talk about in a minute, Krishnan was one of our key informants and stakeholders. And Simon, just as he just mentioned, has been looking at the Pacific, certainly as well. I was based in Fiji, structuring the Blue Bond. Simon was one of our sort of panel members or grantees, I believe, looking at innovative insurance mechanisms for coastal communities under that Blue Bond grant mechanism. So I hope that we'll hear a little bit more about that soon, and we can talk a little bit more about that. So just at Oxford Policy Management, we cover a lot of the evaluations and micro and parametric risk-based insurance schemes. One of the things that we do is the evaluation of ARC program, and we've been doing that for a number of years, so we're seeing emerging evidence and results from that. What we have most recently undertaken is the midterm evaluation CDRFI under the insurance scheme, and the primary objective of that was to evaluate the impact and progress made in achieving the targets on the contributor base for cost-effective CDRFI. And we looked at 4 countries. We looked at Fiji. As I mentioned, Krishnan was extremely helpful in their very innovative work under UNCDF, and lots of the lessons that we've managed to capture have come from that scheme. We can focus on a little bit more, and hopefully we'll hear from Krishnan a little bit more in the next few minutes. We also looked at insurance parametric schemes in Kenya, in Colombia, in Pakistan, and colleagues from the Pakistan delegation are here as well today. As most of you will know, it's now one of the first countries under Global Shield, but also looked at these sort of microfinancing mechanisms and analysed those and have some emerging lessons there. We looked at things like barriers market to entry, openness to innovation insurance, the regulatory barriers that pose the challenge, and then the user satisfaction as well across these, and look to distill some of the emerging lessons we spoke about in a side event just yesterday. Perhaps I won't go into the weeds here, but we really looked at that spectrum of different products available and captured the lessons. I think we'll go more onto in the next session. But the other thing, really just to say, I think we need to not underestimate the value of public-private partnerships within these types of instruments, not least because of the weak institutions and things like that, but also that it's not uncommon that donors implementing agencies struggle with cooperating with the insurance industries as they fear of the favoritism, and also the extent to which gender is included within the structuring of these instruments. So to what extent the sort of gender aspects are part of the design of these instruments. Certainly another study we're doing under the Global Shield at the moment. Perhaps I'll stop there and hand back over to Sinya for now. Thank you.
Thank you very much for bringing up these points. Public-private partnerships are very important. We talk about the role of the private sector, but very aware that maybe the bigger part of this room is working on the public side. So it's also to see what are good examples of public-private partnerships and where are the existing challenges to overcome them. So with that, so there are some mics around you. Please feel free to come in and intervene. So we want to talk about in this session about protection of livelihoods as well as ecosystems. So maybe later we can do a second round focusing more on solutions, on the link of nature and insurance. But for now, linked to the products that were discussed, please jump in. But I would ask maybe from the representatives from the Pakistan delegation to come in if your experience on public-private partnerships, if you have good examples, but then also what are the still challenges and hurdles to overcome.
Right. So learning from Pakistan, we've seen that microcredits are working very well for countries like Pakistan, and then even insurance product in other sectors like health. And similarly, a couple of private sector companies did pilot on the parametric insurance in the agriculture and livestock sector, and it was very successful. I'll tell you the projects, the Takaful, which is Islamic Sharia compliant, so they're doing crop parametric Takaful, but then again, this is in public-private partnerships. So the insurance company right now who are designing these products, getting inspiration from the developed world, some investors, they're investing like Blue Orchard, and they're designing these weather-based insurance products, and then they're rolling out by partnering with the microfinancing lending institutions like Kash Foundations, who really have inroads with the community organizations. They've worked, like I said, that they've worked in the different sector, and now it's easier to reach out to the basic farmers. And then we do have telcos, currently the mobile connections in Pakistan are over 188 million, and about 77% have percentage of people have the access to connectivity. So we have mobile wallets like Jazz Cash. It's a private sector driven initiative. They've come forward as well to provide that sort of support, and we've seen this is very useful app in terms of providing the crop advisory, in terms of providing the weather forecast, and also just do the sort of weather index tracking. At the same time, the government has realized that our insurance sector rate is less than 1%. So they're really providing some sort of tax benefits to these private sector companies to come in West, where we do have big tax brackets for the other sectors, but they're really promoting that insurance sector. We do have, there's this organization called SCCP, which is Security Exchange Commission in Pakistan, which is very active, and they're encouraging the investments to flow within this sector. And speaking to, from our evaluation results, both from Kash Foundation and the Pakistan Asia Insurance, who are working with Blue Orchard, they said that it has been so successful that we had to actually stop the pilots for the second cover, because they'll be designing again with new investment. So, and then obviously we do have now CDRFI support from Global Shield. The only challenging areas are basically we do need some technical assistance in terms of access to the technology at the moment. Like for example, Kashif Foundation said that they're doing muzzle tagging in the livestock sector, but the current precision is just 60% at the moment. So, other countries have advanced technology like remote sensing, GIS. Those are certain interfaces. These apps needs to be more friendly, so that the weather-based indexing is much competent and it's easier for claim processes and those sort of things. So it's working really well for Pakistan. I really hope that with Global Shield and other development agencies, those areas are actually going to be tackled as well. Thank you.
Thank you very much for that input. Yeah, so please jump in if there is a reaction. Yes, please.
Hi, my name is Siraz and I represent Mahila Housing Trust. It's a non-for-profit organization based in India, and we work in India, Bangladesh and Nepal. We particularly work with urban poor population. It's a women-centric organization. So this year we piloted a parametric hit insurance, and we were working on this product from 2023. So I think when it was a product design part, I think we worked with Celsius Pro, earlier known as Global Parametrics, and then we brought in the local insurance. So I think in India, hit insurance is a new concept, but agri insurance has been existing for a long time. So people are quite aware about parametric insurance, But beside that awareness, not many insurance companies were open to try out the new product in terms of heat insurance. So we started approaching many private companies, but it was, we saw a lot of resistance in terms of they were saying that we don't have the track record in terms of how these insurance are going to work. And also I think the data that they require to make any decision in terms of whether this product is going to be financially feasible or not was not existing, I think. So that was a big issue, but somehow I think for pilot we worked out with Digit India and it worked very well. The only issue that we faced that when we had a partnership with the Celsius Pro, for designing the entire insurance product, heat insurance product, the data that they were able to use was ERA 4 data. And the reason we were insisting on the Indian Meteorological Department data, but all the data from the Indian Meteorological Department unfortunately was not available as an open source, and that was one of the requirements for the insurance company and the product design also. So I think they selected ERA 4 data. This in the pilot, I think it went very well, but we realized that the temperature difference between the Indian Meteorological Department and the ERA 5 comes to anything between 1.5 to 3.2 degrees Celsius. So I think the trigger point that was set for the insurance, so let's say it was 43.1 degrees Celsius for the heat insurance. Now in newspaper and in media, it will always be about Indian Meteorological Department saying it's a heat wave. And for ERA 5, it will be like 41 degrees Celsius. So I think this is something that we need to keep in mind, that the data that you're using for designing the model and the data that the population is buying an insurance will always be local data, and if there is no match, there will be a trust deficit issue. So I think we are working on this issue with the Indian Meteorological Department, if that data can be made available. But in terms of acceptance, I think it was a good response from the community, and in the pilot we had around 26,000 families buying this insurance. So I think it was really great, and we are planning to scale it up to around 50 to 75,000 in summer 2025. That's the plan. Thank you.
Thank you very much for that input. And we have another input there.
Thank you very much.
Yeah.
My name is Renir Tendaishime from Burundi. I would like to know how many countries you are, and how countries can join or private can join the parametric insurance. Thank you.
Thank you very much. Yes, maybe I'm handing over that question. Can we get the speakers again on the screen? Maybe I'm handing that to Krishnan. Krishnan, I don't know if you heard the question, but here's a representative from Burundi asking how to get involved in parametric insurance. And I think there are existing programs and, of course, partners to potentially work with.
Yeah, I suppose so. I think, for a country like Burundi, the first point of contact can be ARC. I think the African risk capacity would already be doing some work in the country. It also depends upon the availability of local insurers who want to offer this at the micro or meso level. But at the sovereign level, I think the best point of contact would be the ARC for Burundi.
Yeah, so ARC is the African Risk Capacity, giving national level insurance to countries in Africa. So I don't know if Burundi already has an insurance there. But then the other avenue is to work with local insurance companies that are interested to develop products, and I think there then institutions such as UNCDF can help to come in. We have some points that were brought up where the private sector can really help in providing climate risk insurance. So through the value chain, right? So data was one part, risk, with the risk analytics and risk modeling, that can help provide risk data, but also, of course, there are challenges, as you mentioned, with the sources that are used. Quickly. And then others then are, of course, along the value chain in developing the product, offering it. That's maybe the first thing we think about. But then also with the distribution, to work with private sector companies to help with the distribution and payouts. Mobile money was mentioned, especially if we're looking at the most vulnerable communities. Some of those communities don't have access yet to the formal financial system. They might not have a bank account where insurance can pay out to. So it's very important to work with these mobile network operators, telcos, to see. And I know from experience also in the Caribbean that the regulation needs to be aligned as well. Not in every country, the insurance regulation, for example, allows to pay out through mobile money. So these are things where also from the private side, from the public side, that needs to be taken into account. And then, of course, also as partners for awareness raising later. You had a comment.
I think you covered that point. So so when we are working with the private sector, I think when you start negotiation with the insurance company, they will start with a standard insurance. Now, organizations like us who works with a women in informal sector, it's extremely difficult to have all the documentation that you will require in a traditional insurance policy. Second, also it's a payout. Not everybody is having a public account in a public sector bank and all those kind of things. So I think even at a private sector level, I think we have to build in little bit of flexibility, because this is not a very traditional insurance. Your clients are not the clients you generally deal with, I think. So those are the negotiations and understanding probably we will have to build as we evolve these products, I think. So a lot of flexibility will be required from the private sector also.
Thanks.
Thank you very much. So my name is Shehryar Khan. I'm a health consultant with Oxford Policy Management in Pakistan. Just some quick observations and comments. So recently, we've just finished a climate and health adaptation plan for Pakistan, for KP, one of the 4 provinces in Pakistan. And one of the recommendations coming out of those was that the IDSR system, which is the Integrated Disease Surveillance and Response System, should have climate risk indicators built into it. And that would identify certain hotspots and vulnerable populations across some certain districts, which could then ideally be linked to parametric insurance if possible. And just like my colleague Dure said, Pakistan has, mobile coverage, especially Jazz, for instance, one of the largest telecom companies. Almost probably 70 or 80% of the population would have access to that. And they have bank accounts, not necessarily the traditional bank accounts, but they do mobile wallets. So this could be something. The issue with public-private partnerships in the insurance space in Pakistan, especially with health, is that right now our health insurance, as I'm sure most of you know, in Pakistan is coming from government. So it's the Sehat Sahulat program, which is led by the State Life Insurance Corporation, which is a government-owned entity. The idea would be to open this up to the private sector, to ensure that other companies can also come into the space and provide competition. And the problem with that, the challenge with that would be over-regulated, market, and the ease of doing business and problems in entering the market. So I would love to hear, additional comments and observations on how this can be improved. Thank you.
Thank you very much. And maybe with that, and also earlier was already mentioned from the example in Pakistan as well, that the tax breaks were included. Krishnan, do you want to maybe talk about the good example and success in Fiji, how actually the public sector helps to provide the ecosystem for private insurance companies and local insurance companies to provide climate risk insurance, such as by also waiving the value-added tax and their commitment to offer the product even despite the absence of regulation?
Yes, Inia, thank you very much. I would say that in an ecosystem, for this to be sustainably developed, developed and deployed, we need the involvement of both the public sector and the private sector to work together. Drawing from our own experiences, I would say that to create the enabling environment and to support the ecosystem, the necessary policy interventions are required, either in the form of the disaster risk financing strategies or policies that are being developed in the various countries, including in the Pacific, where they recognize the importance of macro level solutions as well as interventions at the meso and the micro level. And especially in Fiji, which has been seen as a forerunner or as a leader in this space, even as early as 2021, when we were deploying the first generation of parametric products the government, the then government gave VAT exemption for the insurance premium, for the parametric insurance premium, even before the product was launched. When the product was filed with the regulator, it was found that there was a 9% VAT component, which we then wrote to the Ministry of Finance, which they were kind enough to waive in the budget of that year. And since then, that policy intervention has remained, and even though the VAT component has gone up to 15%, that exemption sort of remains. And that shows the commitment of the country to allow such policy tools to be effectively sort of used by the private sector. So, but for that, the insurance premiums would cost around 10 to 15% more, which would make it unaffordable, because these are all user pay principle type of insurance, where the end users are actually paying. There's no premium subsidy, and therefore that means a lot to the beneficiaries. Having said that, I must also say that for a micro level intervention or a meso level intervention, it is also important that the insurance regulator, in this case the central bank or the reserve banks, are playing a key role as part of their national financial inclusion strategies, where they have inclusive green finance strategies built into the national financial inclusion strategies. And they have embraced like deployment of parametric insurance as one of the key measures for building financial resilience in their economy, because they identify climate change and the impact of climate change and extreme weather events to be a real challenge for the economy, and being custodians or are being active partners to the government in spearheading the economic growth of each country. The central banks of the region have taken a very active role, and this is actually evidenced by the recent taking over of the implementation responsibilities in Fiji by the Reserve Bank of Fiji, by setting up a dedicated climate change unit and a team for parametric insurance in the country. Of course, they are also beneficiaries of recent grant by the Insure Resilience Solutions Fund, but it is also a part of our exit strategy, wherein the substantive implementation responsibilities have been handed over to the Reserve Bank just last Tuesday. I would say I was in an event last Tuesday where it was formally handed over to the Reserve Bank of Fiji. So this shows that there is and they are working with the local industry, they are working with the local fintech providers. They were the ones who allowed a sandbox sort of clearance for the first generation of products, which continues till date. So I think these are classic cases where the public sector and the private sector have to work together for delivering such innovative solutions that build the resilience of low-income households. Thanks.
Thank you very much for providing more details about the Fiji example. And Catherine, you know Fiji well, and you know that example. And maybe also, since you've worked on the study looking at other examples, what are key factors that make these partnerships successful for scaling up?
Yeah, I mean, thank you, Krishnan. And I guess just very briefly, as I know that we've got a lot to say as well here, and lots of people will have some inputs, but really just to sort of echo what Krishnan's just said, and I think having looked across the spectrum of different schemes, and one of the things that really made the Fiji one so successful in UNCDF and the work under Krishnan's team, which has kind of almost got 40% of the population now, was that, you know, the political will from the start. So getting that political backing from the start, you know, with the VAT exemption. But then I think also the institutional strengthening. So really, the institutional strengthening, and the way they did that was through not having sort of fly-in, fly-out consultants. It was very much about embedded support. So embedded support, starting a TCOP within the RBF, as he said, and that sort of embedded, building the capacity of the institutions, and then letting them run with it. So I think that's something that we've really seen with that one. And then, of course, the dynamic and innovative approaches, and perhaps we'll move on for some other examples about innovation. But I think really the kind of ability to sort of flex and adapt to the situation and create, keeping on being innovative, as Jure mentioned as well, with the different schemes, the different products rolling out. Even, they're looking at anticipatory products as well, so can help with that preparation. And then finally, something that is prevalent is actually they have done quite a lot of work on that, including gender in the design. So there's been some quite extensive studies now as well across some of the Pacific countries as they expand to really include, the gender and diversity within the design of these products. And that's something, with another study we're looking at across Latin American countries, African countries, that is still in its infancy. Perhaps I'll stop there and we can look at some of the other schemes and hear more from Simon. Thank you.
Yes, and exactly the next question goes to Simon. So you already talked about some of the innovative solutions working with anticipatory action and others. I think this is a good point to talk about how insurance can also help protect ecosystems and support nature-based solutions. Willis Towle Watson has been working, for example, on the Mesoamerican Reef Fund in the Caribbean with AXA Climate. So Simon, maybe you can give some examples on how this could work, nature and insurance, the existing pilots, and explain a bit more how the MAR Fund works, or the MAR Insurance Program.
Sure, thanks, Sonia. I should say the MAR Insurance Program is in its 4th year now, and there's a commitment to continue that. So it's gone beyond the pilot. It's very well embedded now. We are on track to expand it further up into northern Mexico, the Yucatan, Caribbean coast up there as well. So it will be a very well established program. It concentrates on supporting an emergency fund of the Mesoamerican Reef Fund, which is a regional group of conservation trust funds in Honduras, Guatemala, Belize, and Mexico, which all have parts of the Mesoamerican Reef. And the MAR Fund is a combination of those entities working on kind of transboundary issues with the Mesoamerican Reef. And they quite a few years ago they set up an emergency fund, and that emergency fund. They could only get a relatively small amount of money in there because most of their donors, most of their funders want to see their money put to work to do active conservation work. And so keeping a rainy day fund in the conservation space is no easier than it is anywhere else. And so this emergency fund functions very well if it's for a small amount of money going to one of the reef areas that they're actively conserving, and to fill some little funding gaps if there's a ship grounding, for example, or if there's some particular debris gets washed onto the reef, or there's an oil spill. So those sorts of events where a relatively small amount of money quickly can get things moving. But what they realized was that after a hurricane, then mobilizing the response brigades that they have been in parallel been working on over the last 15 years or so needed much more financing, and it needed to be quick. What we know about reef recovery after hurricanes is if you can haul off the debris that gets washed off onto the reef from the land during the hurricane, if you can take that debris off and also reattach broken coral heads, then within the first six weeks to 2 months to 8 weeks, there's a 95% survival rate for reattached corals, and the overall damage, if you get the debris off in that period as well, is massively reduced. And so there's a real timing issue here. And what the insurance program does is basically scale up it's actually the emergency fund which is insured. And so that if there's a payout triggered at any one of the 10 reef sites that are within the program, then the money goes into the emergency fund, and from there it can get granted out to the local response agency, or the local brigade, I should say, which can then get in the water as soon as it's safe to do so and get to work, knowing that they will have the funding to buy the fuel for the boats, to hire the boats, to get the oxygen in the tanks, to and the other basic logistical issues that need to be dealt with. These brigades all have very well developed plans. They do a lot of training, etc. So it's really a very good example of the use or the value using parametric insurance to leverage the value of fast money, and getting that all the way down into to where it's impactful. What we have found, however, is that being proactive in terms of reef interventions after hurricanes or after cyclones is not particularly useful everywhere. In the Caribbean, it's proven to be very useful, but in other parts of the world, it isn't so useful. And so we've been exploring other ways to help with reef recovery through providing financing. In Fiji, for example, it's in many parts of Fiji, the reefs are not particularly don't particularly need to have direct attention to them after a cyclone goes through, but rather if they are left to their natural to nature, and particularly with fish activity, fish circulating, that can aid recovery greatly. And so actually preventing overfishing after a cyclone in Fiji was seen to be more effective. And so and what tends to happen after cyclones in the Pacific is that the fish take actually increases because the availability of other food sources is reduced, or the cost goes up. So what you tend to see is actually more fishing when there should be less, to allow the reef to recover. So trying to kind of address that imbalance through small payments not to fish, for example, is one route that we're exploring through a project funded by the GEF in Fiji and Papua New Guinea. And then the other program I'd quickly highlight is what we're doing with RARE in the Philippines. We're also almost ready to launch that in Honduras as well. And that is bad weather, a parametric which picks up bad weather for fishing. And so and it basically fills a gap if fishers can't go out and fish. Fishers live very much almost day to day, or certainly week to week, in terms of getting their catch, selling it, and that's the money to put the food on the table of their families. And so if that gets interrupted for a few days, even several weeks, that has a really major impact on the livelihoods of those fishers and their families. So what we and there's very good research that actually that is a more important impact than big cyclones, which obviously affect the Philippines as well. And so we've designed something which uses ERA data in offshore areas, nearshore areas where the fishers fish, and catches bad weather periods which would interrupt fishing, and therefore compensate the fishers for that gap in their income. And that program we hope will launch early next year through the Philippines government, and they are supporting that through premium in the budget, and it's being distributed down to the individual fishers, but it's being triggered at the kind of MISO level in individual barangays of the Philippines. So there's a couple of examples there of what we've been doing in the, I would say, in the coastal livelihood space, but also extending that into emerging blue economy activities, and trying to create insurance solutions that will be fit for purpose for kind of the emerging blue economy and especially in those SIDS.
Thank you very much for giving that overview of first examples that are emerging and are there, and also making the point what might work in the Caribbean with focusing on reef recovery is not the same solution that is needed in other regions, which is maybe one of the challenges how to scale up, because you need to know locally what's the best solution. Also an important point on coastal livelihood, right? So we're not yet there to actually put a value, or enough to put a value on ecosystems that would make it possible to directly insure ecosystems. We're basically looking at supporting the communities that are helping to maintain and with the recovery of those ecosystems here, coral reefs or mangroves. OPM has also done some thinking on the link of maybe nature and insurance. Do you have?
Yeah, so firstly, thank you, Simon, for those really interesting examples. I guess I've got a reflection, perhaps an example that certainly I've looked at, and more so in my previous role, but also a question for you as well, I think. So firstly, I think it's really interesting and pertinent that you've looked at the different scenarios, and they have to be directly relevant and applicable to those scenarios on what is going to work and what's not. But also, I think in looking at the mechanisms and the ownership and things like land tenure, which I think is very practical in this, I think a reflection as well, it's interesting to hear. I feel like this is great. It's kind of traverses the sort of DRF and social protection side. It sounds like this is also potentially a social protection instrument. So I guess my question is, where is this lodged? Where is the fund for these payouts for the fishing? Is it lodged within the public purse? So is this a sort of PFM system? So that would be my sort of question. And then the other aspect is, something certainly we've done some thinking about, and I've spoken about it before, is we've worked on nature-based sea walls. So these are sea walls that have 3 lines of defense with mangroves, then rotten rocks and boulders and vetiver grass, and these are for village communities around Fiji. And we managed to access finance from the Adaptation Fund, 5.8 million, to put these into 16 communities. And we are interested in looking at a parametric type mechanism for this. But again, you come back to these same questions again in terms of, who owns it, who pays the premium, land tenure, and who owns, the mangroves. And I think certainly questions like that. So just to summarize, my first question is around, is this system, you're talking about largely a PFM system in terms of the finance flows? And then also I'd be interested in your comments on, how you have sort of overcome barriers in terms of, ownership, premium, and issues like land tenure within these coastal communities. Thank you.
Simon, go ahead. You can directly respond.
Okay, I'll try and keep it brief as I know we're nearing the end. On the first question, in the Philippines example, Catherine, it's a bit of a mix actually. It is right now it's embedded in the government system, and it is effectively social protection, but it's being implemented through an insurance mechanism, so it's going through the government agriculture insurer, actually PCIC. And so we kind of see it as an extension of index-based agriculture insurance into the fisheries sector to some extent. But we are also keenly kind of aware that we need to have it embedded in the domestic insurance space as well. And the PCIC is a little bit of a hybrid instrument. It plays a role on the private sector side as well, in partnership with private sector insurers in the Philippines, but it also acts as the government's vehicle. So it's definitely a hybrid, and I think that's that's actually useful, because I think starting these things entirely in the private sector is really challenging unless you heavily subsidize the premium. And then, the exit strategy for premium subsidy is difficult, and also, the justification for subsidizing private insurance can be challenging. But I see it as a kind of continuum between shock responsive social protection, let's say, and trigger-based shock responsive social protection and parametric microinsurance. And you can use the same underlying mechanisms. And I would like to see that to be the ability to transition from the social protection part. If communities, individuals, like households are emerging out of poverty, out of the social protection system, then they can pick it up as insurance, and there should be something in between as well. And so, rather than looking at them at completely separate buckets, I think we should be trying to think of them as potentially integrated, and I think that would allow for a lot less disruption between these two. What I've seen as being quite separate. Either it's a private sector insurance initiative, or it's a public sector shock responsive social protection system, and I don't think that we're maximizing the impact by looking at them as two completely separate things. On the second point, it's a really good point, and it's very, in the Pacific in particular, as you know very well, those the land ownership, fishing rights, protection rights are complicated. They're very much community based, and I would say we haven't cracked it. It's very much a need to look into it on an individual basis, which makes scaling quite hard. But on the other hand, you do have a lot more flexibility with parametric forms of insurance generally to demonstrate an insurable interest, rather than actually having to have explicit ownership of a particular asset, which you effectively do for indemnity insurance. So we have managed to be quite creative in certain situations in the US with TNC in Hawaii, for example, where the regulatory requirements are pretty strict for insurability and insurable interest, and we were able to demonstrate that to the satisfaction of the insurer there, who looked at it very, very hard. So I think if you can establish that kind of narrative with, in terms of there's a traditional response needed by a particular community, they have certain rights, etc., then that then creates that insurable interest, and you can actually do the insurance, parametric insurance based on that. That doesn't solve the who's going to pay the premium issue, but it does, I think, allow that kind of the financial transaction to happen, which is sometimes otherwise a barrier.
Thank you very much. Very interesting to look at these details, and I think we of course there is not a solution to all of them, like talking about premium support and others, but the topics that we've seen, and I think also an important point, how parametric insurance can help maybe otherwise with traditional insurance not insurable markets, or that become more and more difficult to insure. It's easier to have insurable interest, as you mentioned, and that it's really about a hybrid model to bring in the private sector and the public sector to build the environment, and then also the private sector just to build the environment to build the market, so that the private sector can actually do what it's best to do. We have talked about data challenges, about some of the other distribution points. I know we're at the end. Are there any statements from the audience or last questions that you have before we wrap it up? No? Yes, please.
Hello, my name is Kim Neal. I'm the Vice President of Resilient Habitats for the World Wildlife Fund Canada, and I spent over 20 years in the insurance industry for Lloyd's of London cover holder, underwriting some of Canada's first parametric insurance policies. And this insurability issue on natural assets. I think my statement is like, one of the things that we're really looking at in Canada is natural asset valuations at the front end of all of our nature-based solutions projects, and then trying to create pools of insureds to create that insurability. And a lot of our funding is blended for nature-based solutions. It's coming from the public sector and the private sector. They're both named insureds on our nature-based solutions policies. And I guess like the one, a solution that I would offer as well is that it's not just parametric insurance. Score Re now has launched a great first-party trigger nature-based solution policy that we're also looking at. But we are trying to crack that nut, I guess, as well, of who's going to pay the premium. But we try and do it in that pooled agreement space where we all are funding the nature-based solution. It's a common asset. It's no longer like ownership asset. It's a common asset between Indigenous peoples and local communities who are responsible for that restoration. And then the payout then gets distributed amongst all of the insured parties within the local community. So I think that that's like one of the ways we're kind of like meandering through this in Canada. And it's really, really great to see that we're all coming to this sort of same problem-solving piece of figuring out really innovative ways to make multiple insureds named on a common asset policy. So that's really cool, and I really appreciate all of your thoughts today. I've learned so much. Thank you.
Thank you so much for bringing that. Yeah, as you said, I think we're converging in ideas. As we're also at UNU trying to see how we can bring in sort of the nature and insurance parts together. I think this is one of the solutions to look at funds or to have, because these ecosystems are managed or preserved by local government units or public actors or NGOs or community-based organizations. So if they can act as insurance policyholders. And then, of course, the question about premium support, the idea is maybe to also bring in the private sector where the private sector locally has an interest to protect these areas as well. So I think in coastal areas, you can look at ecotourism or hotels. They have an interest that these coral reefs are maintained and that they're not destroyed. So they would be able to cover parts of the premium. And to contribute to a fund where then also the payouts would go to. And if you pay out to that fund, then you can ensure that it's not used for something else. We're not just funding the private sector or the hotels themselves, but they're directly going to the communities and the NGOs that know best what to do then. Because it's also very difficult to localize what to do, requirements, what to do with the money. So really thank you for sharing that thought as well. And yeah, I think that's I'll close here and thank you very much for the experts online, Krishna and Simon and Catherine, to share, and also to the audience that gave examples. It's an ongoing discussion, and I'm sure there's more examples and ideas we can discuss next year, how to scale it up. But thank you very much for participating, and that late in the day. Thanks.
Thanks, Neil.
Thanks, everyone. All right.